Hi, welcome. It's Mary Ellen McGonagle, Senior Managing Director of Stocks here at Simpler Trading with your weekly Edge show for Saturday, August 6th. Today, I'm going to share with you some of the more impactful news that pushed stocks around last week. And then from there, we will take a look at where we closed for the week, what we can potentially look forward to going forward. And then from there, look beneath the surface and see if we are experiencing any sector rotation, uncover where that relative outperformance is taking place so that you can participate in that. And then also viewer question of the week. And this week, it's all about how you can potentially trade those stocks that are really popping up double digits on earnings. And I'm going to share with you a couple of examples and what to be on the lookout for going forward. So let's take a look at some of that news from last week. First up, early on, we did see that job openings dropped, hiring is slowing, and that is good news as it relates to a Federal Reserve that is looking for the economy to slow down so that they don't have to raise interest rates so much. Also, we did see construction spending for July fall quite sharply. And then we did have a rise in factory orders, but that was back in June, so not as impactful. We did see jobless claims on Thursday stay at a 9-month high. So overall, we are seeing generally constructive news in the sense that less is more. We want to see unemployment increase. We want to see jobless claims stay at a relatively high level. Again, also that the Fed does not feel the need to raise interest rates, which are not good for growth stocks. Now, we did get news on Friday that shook the earlier news of the week up a bit, and that is the fact that the unemployment rate in July, it fell to pre-pandemic levels. In other words, unemployment is being lowered. This is unfortunately not what we want to see. Again, all about Fed action and the impact on the broader markets. Next week, we're going to get some more impactful news by way of the core CPI and producer price index. Both of these are inflation gauges and are closely watched by the Federal Reserve. Also, we're going to get consumer sentiment next week as well. From here, let's go ahead and take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500. I have some moving averages on here and momentum indicators as well. But what I wanted to point out to you, this is last week's price action. The S&P 500 virtually ended flat. And we can see what I've done here is highlighted the possible area of resistance up here, and it's taking us back to late May into early June, this back and fill formation that took place before we had that significant decline. This upper portion of that consolidation period is your area of upside resistance at this point in time. So we will want to break above this level, ideally on volume, to indicate more of a possibility of a continuation of the uptrend that is in place. We can also see the RSI trending upward above 50. That's in positive territory, as are the faster moving momentum indicator stochastics up above 50 and trending higher. So your near-term uptrend is still in place. However, much more encouraging if we can get a break, and we are super close to getting that break above this area of resistance. So from here, let's take a look at some of the underlying sectors in the S&P 500. This is a 2-month daily price chart view of the 11 sectors in the S&P 500. And what I've done here is added a relative strength indicator and sorted these sectors in descending order so that your stronger sectors are up here in the forefront, and then your relatively weaker areas are down in the lower right quartile here. So let's take a quick look. Up here at the forefront, we can see industrials, utilities, technology, and discretionary. Now this on the surface is a very mixed looking leadership area as it relates to a defensive area up here at the forefront, growth in the way of technology and discretionary. And then up here, industrials. Well, I will tell you from having screened the markets, which I do very, very regularly and often, that the leadership areas in the markets as of Friday's close are all being driven higher because of strong earnings reports as well as guidance going forward from a number of the stocks underlying these sectors. In our next segment, I will share with you where that strength is emanating from in these given sectors. And then also equally important, we want to make sure you're aware of some of these weaker areas. Energy, weakest sector for the week, down about 6%. I'll share with you where the weakness emanated from there as well. And then also down in this weaker area, we can see healthcare. A lot of these larger cap pharmaceutical companies are not coming in with great numbers, or even if they are, the numbers are not being rewarded. So again, up here at the forefront, companies reporting relatively nice earnings and sales and being driven higher by investors because of that. So let's go ahead and take a look beyond these sectors and some of the ETFs that I like to follow that are very representative of the underlying market. And then also for me, I am going to focus on growthier areas and the stocks within those areas that are poised to and then go on to outperform the broader market. So same idea. I have that RSI here in descending order. And let's take a look at some of these underlying groups up here in the forefront. First up is Biotech, and this was one of the better performers last week, up over 5%. I'm using IBB, and we can see this nice gap up that took place on Wednesday, pushed IBB above its prior high here from July, and it is now poised to break above this blue 200-day simple moving average, which would indicate further upside. This is one of the suggested holdings from my MEM Edge list. We did get back into it here in mid-June, sat through this consolidation period, and last weekend in my Sunday report, I talked about this possibility of this potential move above this prior high, all about earnings. Some of these major biotech firms, Vertex, Regeneron, all came out with good numbers, and investors liked that. So let's go back to our ETF view here, and I'll share with you some of the other strong areas, again, with an eye toward you being able to either participate by using an ETF in that area or an underlying stock. And this is semiconductor, SOXX, the ETF. This is an area where I also have representation with stocks on my suggested holdings list. And we can see the continuation rally with SOXX finding support at this upward trending 10-day simple moving average. This 200-day is going to be that next potential area of upside resistance. And again, all about companies coming in with results that are better than estimates, or they are guiding their growth prospects higher going into the remainder of this year. And so that is going to take us, both biotech and semiconductors are a big part of the NASDAQ, which outperformed last week. The NASDAQ was up about 1.7% relative to the S&P, which was flat. Let's take a look at another tech-related area that is on the move, also outperformed, up over 3%. This is software ETF IGV. We can see the nice uptrend taking shape, your outside momentum indicators trending upward and in positive territory. Again, all about earnings. And this is an area where I will share with you two of the top performers, not only in the broader markets last week, but within software, all about earnings. So moving on, again, taking a look at some of these areas that are a little bit weaker. And I talked about energy being a big underperformer, down about 6.5% last week. And here we are. This is a view of the price per barrel for Brent Crude oil, down at about that 95 level. And anything below 100 is considered, certainly relative to previous price action in oil, is considered weak for these energy names. But we can also see that there was a bit of a rally in the price of oil on Friday. But overall, let's go ahead while we're here, and I'll share with you a view of XLE, which is that ETF for energy, and you will see that it is now back below this 50-day simple moving average outside momentum indicators in negative territory. So not constructive on energy at this time. Also, another area that I wanted to share with you that is very critical to price action, certainly has been in the recent past, and that is the yield on the 10-year Treasury. And we can see that it had been in a declining phase. These reduced interest rate environment has been really good for growth stocks, but over this past week we are seeing interest rates ticking up again, particularly following the unemployment news on Friday. So it's going to be very telling to see if we continue to see a rise in yields, which this is the yield on the 10-year, whether growth stocks will be stopped in their tracks or can they continue to rally on strong earnings. So from here, let's go ahead and take a look at a couple of names that reported last week, and I'll share with you what to be on the lookout for going forward. First up is Atlassian. This is TEAM, a big software stock that came out with their earnings on Friday. The stock gapped up almost 17%. Take a look at the huge volume that took shape here as the stock rallied to new near-term highs. So a couple of things to be on the lookout for here. First up, your outside momentum indicators are positive. That's very constructive on the daily chart for near-term price action. However, we are very close to coming upon this blue 200-day moving average, which is at 287. You will want to watch price action at that point. If we can break above that 200-day, further upside ahead. From here, I'm going to take us down into an intra-day daily chart so that you can get a little more insight into how this stock is poised to trade next week. So here we are with Friday's gap up in price. And incidentally, when this does occur, we're seeing it quite a bit this earnings season. You want to take a look at the following price action. This is a 15-minute price chart, and then I have a 5 and a 13 simple moving average. And you also want to pay attention to your momentum indicators, RSI, and your MACD. So at this juncture, we had that gap up. That first hour was very productive for TEAM. And take a look, it is held above support here. That's going to be these moving averages, and your momentum indicators are both in positive territory. This is your MACD. We got a negative crossover. However, as long as it remains above that net neutral zero, you are in good standing. Super nice volume characteristics, and I will tell you, depending on how the broader markets open on Monday, I am on the lookout for further upside near term with TEAM. Let's take a look at another software name that reported last week that is also well known among those, including myself, who follow high growth software stocks within the realm of technology and other growth areas. And this is NOW, ServiceNow, another stock that had a big gap up on earnings. However, in this case, I'm sharing with you a weekly price chart. And the reason here is because when looking for a longer term outlook, you want to use a longer term chart. So on this weekly chart of NOW, despite that big move last week, and most of it did occur on Friday, your outside momentum indicators are still negative. Your RSI is poised to break above that 50 and into positive territory, not quite there yet. And then this MACD momentum indicator has had a crossover, but it too is below that net neutral zero, and we're not seeing a big push. What I also want to share with you is historical precedent, taking us back to July, June, and July of last year on this weekly chart, and take a look at the dynamics that preceded a nice leg up here in NOW on the weekly chart. First up, your MACD, black line up through the red, and then it went into positive territory, nice high volume characteristics. Most importantly, the stock broke above its 10-week and 40-week. That's its 50 and 200-day moving average on nice volume, and your RSI did turn positive. So for a longer term view, we will want to see these similar characteristics take shape before entering NOW with a long-term outlook. I'm going to leave it at that, everyone. Have a great rest of your weekend. I look forward to seeing you here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.